Guys, this is Dan with Index Option Trading on June the 1st after the market close, and we start off with the chart of SPY. And we take a look at it. The SPY closed nicely here. We put on some positions, and then next day, which was a day before the holiday, Friday, we had a massive sell-off. Well, that was right on the 200-day moving average, and then today, bam, we slammed down here towards the close. The market was up, running here during the day, and came in a selling program right towards the close, 30-45 minutes into the close, and slammed the market into a very bad fashion. And it doesn't look good here. If we're going to stay here below 110, this market is untradeable in a way because it's not going up, it's going down, because otherwise they were confirming to a downtrend here. This is down, this is down, this is down. This 50-day moving average now is curving below, and it's downwards movement. Also, pretty soon you're going to have 200-day and 50-day come together if we continue in this pattern and we don't finish this business of going above this 200-day moving average. The volume, if you take a look at it, has been declining since last few sessions, 1, 2, 3, 4, 5. It's a declining volume that the market is trending down. One thing that is telling you is that there are less amount of participant in the market. The people are either on the sidelines, or they're not participating, or there are not enough buyers, or there is lack of participation, and the volumes are dropping off. Even though the sell-offs are continuing, but the participation levels are down. That needs to be very much addressed and looked at it in conjunction with this movement of the index. Let's go back and let's go and take a look at SPX here. And this is what the chart looks like, and I'm going to put here a McClellan oscillator as well, so you can take a look at it, what the McClellan oscillator is doing, which is oversold and overbought conditions. The McClellan oscillator was on a neutral condition, now is again back to the minus 110 low levels. And we move down here, touch this 200-day moving average. Bam, Friday did not close, and then today we gap down and slow. And in slow motion, the last half hour, 45 minutes, slammed it down. So this has become a pattern here. No matter what the economy is doing, the economy is definitely, there are good news all over. The retailers, their earnings have been good. The sectors which are very much affected are going and doing well exactly. And now we're having this issue. The market is not taking off with the improving economy. As James Altucher, I was watching that on tech ticker Yahoo News, was saying that the economy is not in a V-shaped recovery but in a check-marked recovery. And with those check-marked recoveries, which is much more brisk and robust, the market should have been taking off, but that is not exactly what it is, and there's a divergence here. And this is exactly is happening because the Senate is still muldering about in the bill, trying to reconcile that behind the scenes with the House bill, and they're trying to water it down, and they're not succeeding. The Wall Street people, they have spent more than $1 million per senator, per congressperson, and still they're not succeeding. And the bill is going to hit the Obama's desk for signatures pretty soon, in within this month. So behind the scenes, you would not hear this, but this is the anger that is translating into it, and you may call it anything. The divergences between the rising economy, improving economy, and the stock market downward fall are very important to know. And the principal reasons are there behind the reasons we have seen why this has started here in the first place. So the market becomes untradeable unless we close about 1100 and up.